Hello, this will be our second video within FA1 paper recording financial transactions, and just to remind you, we're still in the express notes. We're still in chapter 1. We're on page 9 actually right now. You can download the express notes from www.theexpgroup.com, and it will be very useful because all the videos are based on those express notes. Now, today's subject will be books of original entry. We will discuss what they are, where you can find them, and how useful they are. Now, before we start discussing that, books of original entry has been a difficult subject for most of the exam takers, and the reason for this is that, technically speaking, they no longer exist. So now, in your own mind, you have to go back to the time where computers did not exist. Accounting packages installed on server accessible from anywhere in the world did not exist. None of that ever existed. Alright, instead of that, you are a bookkeeper in a company that records all transactions on paper, and therefore you need to make all the entries yourself in that book. And because all your documentation is on paper, if you recall, you probably know it from your studies or from your grandfathers, that this is a T account. And because all your documentation is on paper, it would be very difficult to record every single transaction on the T account, simply because you enter into hundreds of transactions every day, and therefore this T account would be very, very, very long and would have a lot of inputs here, which would make it slightly illegible. And because of that, books of original entry, or books of prime entry, were invented. These are just, technically speaking, notebooks where all transactions are entered one by one, and then maybe at the end of the week or at the end of the month or at the end of the year, well, less likely, the totals only will be posted to T accounts, and therefore the number of items on the T accounts will be smaller, and that will make the use of T accounts possible. T accounts will not be full of details. Now, today we might say books of original entry no longer exist. Well, technically speaking, probably every single accounting package could produce them, but nowadays, where the limitation of the number of transactions to be recorded and the whole thing to remain, capable of consuming and understanding for people who use it, it's unlimited now, right? Accounting packages can store as much information as you only can think of, so books of original entry are no longer needed. So that's why many people struggle to understand the concept. But if you go back a step and see the bookkeeping without computers, you will see the rationale for the existence of books of original entry. Now, what sort of books of original entry have we got? The first one is cash-in book. Now, that is a notebook where you record all the money that the business received into its bank account. Right? It's called cash-in, but still it is bank account. So, based on bank statements, every single item received will be put into that notebook. Then another one is a cash payment, and then all the items paid out of the cash book, out of the bank account. Now the source of that will also be where you pay to supplier, right? You will record that, but you pay from the bank account. You make a payment through a bank account, then it will be recorded in the cash payments book. On the other hand, you will maintain a petty cash book. That is the real cash, right? That is the real banknotes. It's called cash on hand. And you will have a separate notebook where you will record all the items paid and received into the cash book. Now, sales daybook will record all sales on credit, right? So only those sales that you need to remember that someone owes you money, because if you sold cash, it will be recorded in the petty cash book. So sales daybook is sales on credit, and you will record all the transactions there. However, the same transaction will also be put into another notebook with customers. We will come back to that later on in our video number 10, but this notebook will have like a separate page for each customer, because obviously at any point in time you need to be aware how much each customer owes you. Now, purchases daybook, on the other hand, is the record of all the purchases that you make. And finally, journal book is all other postings. There are certain postings that do not result from source documents. Right? The example is depreciation. You're not going to get it on an invoice or something. Payroll. Right? Another one. Your employees will not issue an invoice. You just have to calculate it. All those things like accruals will go there. The transactions that do not come from source documentation. So every single transaction that you enter into during a period must be entered into one of those books. And then at the end of the period, or at the end of the interval that was assumed in this accounting system, the total from your sales daybook will be transferred, and the total of that will be recorded as debit receivables, credit revenue. Alright? The cash books, now these actually will be maintained cash payments. Now these will be maintained using columns, so that you know for what you're paying. So this will be the transaction, and the column will be purchases of goods, salaries, rent, and so on, as many columns as you have types of expenses. And then at the end of the day, the totals will be posted. It's cash payments, so every time credit will be cash in bank, but the debit will depend on the type of expense. This debit will go to payables. We paid for some payables here. This one will go to salary expenses, and this one will go to rent expense. So each column of the cash payments book will go somewhere else in the T accounts.